please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Nikkei is under some pressure. That, in fact, is down close to around 0.2%. The Kospi as well was trading with a cut of around 0.2%.
IT index has outperformed the Bank Nifty by 22%. So perhaps in the near term, it got overdone on Friday, so there's some bit of reversal. But that big trend is intact, that IT is your big leader.
This is the first investor meet under the new CEO, Salil Parekh. It will be held in Mumbai today. The timing is 4 to 7:30, where the company will focus on its strategy as well as capital allocation.
First trade is only 0.2 higher on the Nifty and 0.3 higher on the Nifty banks.
You will still see a lot of buoyancy in IT. In fact, if I may say so, it's the large caps which should now sustainably outperform.
Affordability in the housing space from a consumer point of view has been steadily improving.
TCS has enormous potential, and the digital transformation was only going to accelerate the market potential for TCS.
65 points in the Nifty is nothing but good. 10,629 is where the Nifty stands.
Okay, momentous day, of course, for TCS, but been a good day for the market as well. From the low point, there's been quite a bit of recovery. This is Closing Bell. I'm Anuj with me, Surabhi. Hi, Surabhi. Good afternoon.
Good afternoon, Anuj. So first things first, we've been trading above that 10,600 mark for a while. Not too much of volatility today. So does it look convincing? I think that's what people will wonder.
Well, you know, it does. And Surabhi, you know, this was my point in the morning as well, that today the market was a bit charitable, gave you that dip. If you see now Friday and today, both days, the market's given you a dip around 10,550. It's not broken that. The sense you get is that the bears are losing this battle, at least for this series. Let's see, it's now a bit of a congestion zone around 10,620. You need to take that out to force further short covering. But the market's got enough leadership now. IT, of course, is a phenomenal leader for the market. Other stocks also chipping in. Expiry week, so the momentum is with the bulls. And the issue in this market is that every 20-30 point dip is being bought into. So unless there's something which changes the overall texture of the market, at least for this series, and I repeat my point, at least for this series, because it's you leave series to series these days. April's been a remarkable series with leadership from the IT. So I think good going for the bulls.
Speaking of IT, I was just counting. I mean, I'm not even looking at large caps like TCS. I mean, on my list, 1, 2, 3, I think 5, 6, 7 of the mid-cap IT stocks are at their 52-week highs. That's been the ferocity of this move. There's some profit taking, of course, right now coming through. But what is your sense on this massive rally? You know,
you have to now divide this in two parts. I think if you're now piling onto the bandwagon, I think you're late. Let's make any mistake about it. In the near term, just in the near term, if you're asking me, will TCS be a 4,000 rupees stock at some point this year? My answer is perhaps it will be, right? So it's still got a lot of rally in it. But before that, will we just go back and test say 3,200 thereabout? Possible. That can also happen because as if you saw the intraday chart of Hexaware as well, there also you've seen that the stock coming off a bit, and stocks like NIT Tech and Tata Elxsi actually have rallied a lot and now way above what any fundamental value you would want to give them. So everything is good at a price. Right now, it's about chasing momentum. You want to do that, that's your call. But the sector is in a bull market. That should not be forgotten. By the way, just one more point. Pharma stocks are beginning to make highs of the day. I think a lot of people believe that perhaps is the next one going to be with the pharma stocks. Again, that index is trading at the high point. On that, it's not as secular a call as it is for IT. But for pharma, it's more stock specific. But again, a beaten down sector which is trying to make a bit of comeback. Look at stocks like Cipla, Lupin. I'm just looking at Cadila. The way these stocks are moving, and the market's betting big on this now.
Oh, absolutely. Yeah, I mean, the two dog sectors of the market. One obviously has come back with the bank.
How should you position yourself in this last hour of trade? We have Ashwani Gujral and Mitesh Thakkar joining us with closing strategies. Good afternoon. Ashwani, you go first. Your thoughts on how the day has panned out so far, and is there a trade for last hour?
See, broadly, we've hung around this 10,600 zone for most of the day. Now, on another day, from 10,600, you would be down 50, 70 points by now. Today, bears have tried their best. I don't think they are being greatly successful in pushing the market lower or scaring the bulls. So my sense is last hour, if you buy Nifty, Bank Nifty, IT, whatever, I think last 1 hour you should be higher than where you are right now. There's a bit of profit booking, but nothing serious. I think bulls are fairly strong, and maybe we could end at the high point of the day. So the idea is to buy and not look at shorting opportunities. As far as individual stocks are concerned, Ultratech is a buy with a stop of 4100, target of 4250. Mahindra & Mahindra is a buy with a stop of 800, target of 855. And Titan is a buy with a stop of 960, target of 985.
Yeah, M&M also having a great run today, 52-week highs for that stock as well. Good afternoon, Mitesh. Let's get your trades in and, of course, thoughts on today's action and whether you're convinced with this move above 10,600.
Good afternoon. So I think not yet, but see, we've been maintaining a positive bias and I've been calling for consolidation. So we've gone to 10,620, 630, not broken above that. So if I was to buy, maybe, once we cross today's high, I think that could be a good pivot to take some kind of a call on the markets. I think once we start getting past that, then I think another 90, 100 points could happen on the upside. So as of now, my only worry is that the bank Nifty is not participating with full force, and that's kind of keeping the Nifty movement beyond 10,630 in check. So I think I'll possibly buy after the confirmation. But we are trading with long bias. I've been looking at this, eventually this consolidation to be breaking on the upside. So stock specific wise, I have two buy calls. PVR is a buy with a stop at 1340 for targets of 1400, and BHL is a buy, keep a stop at 88, look for targets of 95.
Okay, both stocks doing well. Ashok Leyland, another lifetime high for that stock, so that one's looked good. Apollo Tyres is up quite a bit. A lot of these stocks doing quite well as far as today's trade is concerned. SP Tulsian of sptulsian.com and Anand Tandon now join us. Good afternoon, Mr. Tulsian. I first wanted your thoughts on Mahindra & Mahindra. I mean, you like this stock in the past, has been one of your top picks. At current levels, you maintain the positive view?
Yes, still, and that was our call, that if you really see the kind of growth which they've shown in the farm equipment, the tractor sales on the absolute number and even the relative growth as compared to escorts has been seen better, and unfortunately the stock has not participated, but having gone ex-bonus and thereafter the stock is seen to be on the buying mode by the institutional investors and all. Maybe HNIs also have started lapping it, maybe some PMS buying is seen. So we are quite positive, and once you have a good monsoon forecast, obviously the sales numbers for the month of April and May for the tractor segments are seen to be quite good, and even on their PV segments also the company has been doing quite well. So taking overall call, I think they have advantage of both PV as well as farm equipment, and definitely the buying call on the stock continues to remain, having initiated by us earlier.
Okay, that's a positive view on Mahindra & Mahindra. Anand, good afternoon. I want to take this conversation on Pharma forward with you. The point that Anuj made, I was also noticing these stocks. A lot of mid-cap pharma stocks are up and about today. Jubilant Life Sciences, I'm seeing Indoco move now. The large caps like Cipla, Lupin, they're also seeing some buying. Do you think this is just the market getting excited with the IT play and maybe trying to extrapolate that playing the underdog theme? Otherwise, is there a specific pharma stock that you can single out that you like at the moment?
Well, there are several actually. I think it is one of the less owned and definitely one of the less valued sector, less expensive sectors. It has had its share of problems, but I think the market is probably underestimating the kind of turnaround that is happening in many companies. For most analysts, including myself, Aurobindo seems to be extremely cheap. And of course, we've begun to see some movement there, but it is still way down from where it has reached in the earlier cycle, and the valuations are completely non-demanding. But there are a whole lot of other segments within pharma, not just a direct generic play, which also, some of which have been doing well, like Biocon, but there are others also which kind of lend themselves, testing labs, things like that, which are smaller companies, not necessarily in the front line. But to answer your question shortly, I think you will find that because of both the rupee as well as the fact that there is some level of uptick that you will see in the US market as well, overall companies which are kind of ignored in the market today will certainly begin to do well. Pharma is definitely one of those sectors which you should be looking at for the next 12 months.
Okay. Mr. Tulsian, the other space that has done well today is cement, led by the big one, Ultratech Cement. That's up about close to 2%. In the cement pack, what would be your top 2 or 3 buy ideas?
So if you really want to make money, then one has to really hunt for the smaller cement space. Maybe the results have not been yet out for the majority of the company. Only 2 results have come. One is ACC, second is of Sri Digvijaya Cement. And if you really take a call on both have really cheered exceedingly well. But taking a call on Sri Digvijaya Cement, where in fact we have initiated a buy call, the company has really shown a dramatic turnaround. And if you see the YOY growth in their Q4, a 1400% growth, and it's a multinational company with a Brazilian parent holding 75%. They have the huge presence in the building material world over with a capacity of 60 million ton, 58 million ton globally, and this is a very small plant, 1.2 million ton, and they had problem since they acquired this company in 2012 from Aditya Birla Group company, who couldn't turn around, or probably that was a too small a unit for them. Similar is the case with maybe taking cue from ACC. I think the Ultratech Cement, Ramco, Shree Cement and India Cement, all these 4 players, who have a capacity of more than 25 million ton are going to perform very well. But taking a cue from the mid-sized cement companies, maybe one has to keep an eye on the Sangye Industries and JK Cement, because if you take a call on JK Cement, again it's an excellent company having a capacity of 12-13 million ton. They have 45% market share of white cement also, and probably they can really cheer the market with extremely good numbers for this Q4 as well as for Q1, because going forward we have the visibility for the excellent numbers from across the board from all the cement companies. Coming specifically on the same mid-sized cement capacity space, I am keeping an eye on Century Textile, which have again shown a dramatic improvement in their EBITDA margin for the cement segment for last 2 quarters, because of the focus of the AV Birla Group, now seen taking in that company again. The performance will be seen quite high. So we have across the board been keeping extremely positive. It is a matter of choice that what kind of company you prefer. If you really want to go for the higher, relatively better performance, I think this mid and small size companies can give much larger gains. As I said, Sri Digvijaya Cement has already risen by about 20% in last couple of days. But still we see this company, because if you take the PAT margin of 7%, which are comparable with any large player, I'm talking PAT margin, which is seen from the ACC or maybe Ultratech or maybe Ambuja. If you have the same kind of performance posted by these companies also, you have ample room for appreciation going forward. So we are keeping extremely positive view on hopes of better Q4 numbers as followed by better Q1 numbers as well.
On this call on Century Textiles, Ms. Tulsian, you reckon this stock can go back to its previous highs? Because I remember it had gone to 1500, 1600 and after that has corrected as well.
I think it is just a matter of time, because if you really take 3 verticals there, one is paper, second is cement and third is real estate. Cement I have already spoken, they have 13-14 million ton capacity. Their real estate vertical is really doing well. They have already leased out 2 lakh square feet at Prabhadevi, that is Century Aurora, and the second unit at second real estate property at Worli is gradually getting leased out, and eventually maybe in this FY18 the leasable area in that space, that pocket can rise to about 6 to 7 lakh square feet. Third is the paper, which is again doing very well because of their tissue paper capacity of 36,000 ton and writing printing paper of 2 lakh ton. And the third and the fourth vertical, which is the best part, is their Century Rayon Kalyan division, which they have leased out to Grasim Industries and received an upfront payment of 800 crore. They have in fact realized the entire 15 years conducting fee or maybe leasing fee of that plant, and obviously keeping the land rights with them only. So 600 rupees up, 15 years royalty plus 200 crore interest-free deposit having received by the company in this Q4, will see their interest liability also getting reduced in FY19 to the extent of about 80 to 100 crores, and on an equity base of about 120 crore, that straightway gives an EPS accretion of about 7-8 rupees. So taking all, I think they are firing on all cylinder. I won't be surprised to see again, Century Textile giving a gain of 40% in this financial year, as I've indicated for Godrej Industries. So this is also on our high priority list of recommendation, and we are quite bullish because it seems that Century is ruling at its lower end and capable to give 35 to 40% gain from the current price in this FY19.
Okay, all right, that's a view on Century Textiles. Mr. Tulsian retaining his positive call. By the way, you're of course seeing the update on the rupee. That weakness continues on the currency. Lots of stocks moving around for the time being on the screen. Just to give you some updates, NMDC is now hitting the highs of the day. There's some amount of buying coming into Balrampur Chini. That's quite evident right now. Torrent Power is moving higher. So lots of stocks on the move. Ashwani, I just want to ask you, NMDC, actually extrapolate that question to metals. Since today is not a metals day, and if someone is looking at sort of a positional trade for the next 1-2 days, is this a good time to get in? It was a sector of last week.
See, the way these guys were flying the other day, 8%, 7%, I think 3-4 days of sideways move. Right now, market's priority is different. It's more into tech, etc. So while tech moves up, probably metals consolidate, but they are buy on dips. I mean, nothing wrong with the sector.
Okay, Ashwani, we'll talk to you in a bit. Of course, for now, the market is up quite a bit. In fact, 52 points higher now is what we have on the Nifty, and the Bank Nifty up about 56 points.
Still holding on to gains of about 0.5% on the Nifty, actually, or even on the mid-cap index, and it's the Nifty Bank that remains slightly sluggish at this point in time, at least. Sandeep Wagle is here with us to get us some trading ideas. Sandeep, good afternoon. What's on your list? Is there anything apart from IT, let me ask?
Yes, there is. Afternoon, Survi. I would go with a buy in a Torrent Power, stop loss of 237, target of 248, and a buy in a Ashok Leyland, stop loss of 155, target of 165.
Okay, Sandeep, thanks a lot for those trading ideas. Just pull out the chart of ABB. That's been one of the strong stocks, of course, today. Still up about 5.5%, and that one up about 5.5%. Taking cue from that, even Siemens has done well. That stock also up about 1.5%. Mr. Tulsian, on ABB and even on Siemens, if you have a call, because in the morning I was reading a positive brokerage report on ABB that perhaps things are looking good again.
See, actually ABB and Siemens both are leader in their space, whether you talk of T&D, whether you talk of electricals, whether you talk of switch gears. And actually, we have been, if you recall, we have been giving a buy call on entire sector. And actually CG Power, I'm not saying that CG Power is a very healthy company. You can give the P multiple of 50 or 60, which is given to ABB or Siemens, or maybe sales to market cap of 5 to 6x. So, I have always been saying that yes, though we have been keeping the positive bias on ABB and Siemens, but CG Power is again in the same space of T&D, transmission and distribution, catering to railway, electrical automations and all sort of things, and available at a top line of sales to one time market cap, or maybe, now turning out to be a debt-free company on a net basis in the next 3 to 6 months. So yes, ABB, Siemens, you can't doubt about that. You can add GE, T&D in that space. You can add, the Bharat Bijli in this space. So they are all excellent companies in their own presence and own existence. And yes, we have been keeping positive view on this. It's just a matter of choice whether you want to buy these expensive stocks, which will give you the returns of about maybe 15 to 18%, but it's a matter of perception whether you are convinced to buy the stock at a P multiple of 50, 60 or not. Otherwise, there is no question on the investment potential of ABB, Siemens, GE, T&D, or maybe CG Power, or maybe Bharat Bijli kind of stocks.
Okay, Mr. Tulsian, just one more stock for you, which has been consistently strong today. Minda Corporation volumes are also several times of the average that we see. Apparently there was a plant visit that the company conducted for shareholders. I don't know if there was any new information shared, but in case you've had a look at this company of late, any thoughts?
See, I don't think that plant visit is, I have read that news that, they've arranged for the plant visit, but that is just a trigger. But if you really take a call, in fact, we have been recommending this stock from the level of about 80 for the last 18 months or so. And it's an excellent stock. It is having a global presence. They are not only the Indian company, they have a multinational presence. And it's an excellent auto ancillary stock. If you really go by their product profile, you probably won't be named them. You won't be, there must be at least 40, 50 products. And the kind of growth and the improvement in their margin which we have been seeing for the last 18 months or so. In fact, we have initiated a buy call last December, about maybe 16, 17 months back, when the share was ruling at around 80 rupees. And since then, we have been keeping a positive view on this. And it's an excellent stock. In fact, Minda Industries and Minda Corporation. Minda Industries is owned by his brother, and Minda Corporation is owned by Ashok Minda. So this company is excellent and having huge potentials going forward. And but maybe stock, since having moved to a level of about 200 rupees, we won't recommend buying fresh at the current level. But those who have been holding since long can remain invested in the stock.
Okay, Anand, I wanted your thoughts on Ashok Leyland. I mean, it's been an evergreen stock. consistently making, every week is a new 52-week high on this one. So how do you approach a stock like this from investment point of view?
Well, if you're already in it, hang on. If you're not, then wait for a dip to pick it up. But the commentary is very strong. The management seems to be very comfortable in terms of saying that they will continue to gain market share, and they have demonstrated that. So right now, there are no red flags at all as far as Ashok Leyland goes.
Mr. Tulsian, before we let you go today, I have the same question on IT now. Given this monster rally, where almost every single stock is at a 52-week high, large cap, mid cap, how does an investor approach IT now?
See, we have been in fact saying this for last 3-4 months that we are selective only on mid-cap IT. I agree that TCS has given exceptionally positive surprises, but looking to the present level, in fact, our buy call was on maybe stocks like Persistent, Hexaware, Tata Elxsi, and after the results we have given on Cyient. But there are many other ideas, maybe in the morning I've said about Saxoft having posted good numbers, but I don't think that now the things are looking better, because generally, you see the traders frenzy also as well as the new buying coming in, because those who have accumulated it at a lower level about 2-3 months back, whether it is in mid-cap IT or it is large-cap IT, the profit booking is bound to come, because at that point of time it was more a defensive sector than the investment-oriented one. But after having seen the commentary, the huge positive guidance, in many of the players seen having coming in, whether you talk of Mindtree or whether you talk of Mastech, probably market is seen to be going overboard, and generally, we avoid chasing the momentum or, riding the momentum, and hence, we won't be taking a call even on our other 3 stocks or 4 stocks which we have recommended, like Persistent, Hexaware and Tata Elxsi, which have been our buying stocks, in the mid-cap IT stocks for the last about 4 to 6 months.
Okay, well, look at the stock that's making a big comeback now, price volume move on Ujjivan. Just pull out the intraday chart of that stock, and that one right now is making highs of the day. After a long time, that stock is crossing that 400 mark again, 403.7 on Ujjivan. Mr. Tulsian, your thoughts on this stock? This one is also corrected quite a bit from its highs, but at 400, is the risk reward favorable?
Still seen very favorable, because you have to have the comparative peer comparison, because take the 4 stocks which I think that they are fall in this same category. One is Bharat Financials having taken over by IndusInd Bank, so doesn't have its own price discovery. Second is the recently listed Bandhan Bank. I agree that because even in Bandhan Bank still they have about their 82% books into the microfinance. Only 4th would be Equitas Holding. If I just make a strict comparison with the Ujjivan financials, and if you really go by the financials or maybe the margin, growth potential and other things, I think Ujjivan stands out still even now. I don't know, because initially post listing, when we post our buy call about 18 months back, the stock has risen by about 100%, but since then it was gone out of favor, largely because of the profit booking and all that. But looking to the peer valuations, I think that the buying and the valuation call will definitely be coming on the stock going forward, and still we have a very positive view on the stock going forward, and still at the level of about 400, if you have a time horizon of 6 to 12 months, one can definitely take a plunge into it.
All right, Mr. Tulsian, thank you very much for joining us on the show and giving us your view on all of those stocks. We'll touch base with you again tomorrow. For now, let's welcome in Siddharth Bothra, who's a fund manager at Motilal Oswal AMC, manages the Motilal Oswal Focus 25 fund. Siddharth, good having you on the show. It's pretty interesting that within the fund, at least up till now, you haven't had a very big overweight position on either IT or pharma, and pharma stocks are really flying around today. Are you looking at changing a tactical sort of mix now, or do you think that this rally is pretty much perhaps running its course?
Hi, good afternoon. Yeah, you're right. We have, till now we did not have much weight on both IT and pharma. But you're right. We have built our position on the pharma side. I don't know which fact sheet but incrementally that's a segment where we think there are a lot more values, and especially on the more on the mid-cap pharma or pharma companies which are more focused on domestic side. We are a lot more positive there, and now incrementally that's a segment we would be looking out for.
Okay, that's interesting. Siddharth, hi, good afternoon. So, your thoughts on a couple of these insurance plays. You are holding, both HDFC Standard Life and ICICI Lombard. You reckon this space can give good compounded annual growth rate over the next few years?
Absolutely. I think there are very few sectors, which are growing the way the insurance sector, both on the general and life is. And, mind you, compared to other financial services sector, where there are not really a lot of moats there. In both life in general, I think there is a credible moat. The competition, is much less, and in fact, you're still seeing the phenomenon where the PSU incumbent is losing market share, and some of the larger private guys are gaining more and more market share. So I think from that perspective itself, the growth becomes a lot more attractive for some of the companies which have higher moats there, or some of the companies which are more established there. Apart from that, I think this business itself is, both on life and general insurance side, a lot more attractive as such. So I think these are the two sectors which, going forward, should, do very well and lead to a lot of wealth creation from here on.
So let me ask you about the other end of NBFC, Siddharth, housing finance. We don't have too much evidence. We've just seen numbers from one company as of now. We'll see more through the course of the season. But what is your sense? Do you think that the growth rates can be sustained with good asset quality? And what would your positioning be here?
See, in case of housing finance, we are there only in HDFC. I think what's happening on housing finance side is, companies which have good, basically who are more on the segments where, which is not the tier 1 cities as such, which is more so-called affordable, or segments where, you're talking of cities where the affordability is still good as such. I think those companies with good asset quality and, those are the companies one needs to watch out for. So, while on the housing finance side, I think the growth still continues to be strong. If you leave out some of the segments, like if you leave out some of the, urban cities and so on, the growth is strong, and there are, several companies which are managing to have good asset quality there. So, I think in case of housing finance, you need to focus more on the asset quality, for those companies, and be in those names.
Okay. You have, at Motilal Oswal, autos always has been one of the preferred picks. You've seen, stocks like Maruti, Eicher do remarkably well for you. Before that, even, Hero MotoCorp. Okay, so that before that, I just point out Cholamandalam's numbers. Net profit at 289 crore versus a pool of 269 crore, so that's slightly higher. Keep in mind the stock is at lifetime high, and it had built up into these numbers. So unless there's some significant beat which you see on the other parameters as well, there's a good chance that perhaps the stock sees a bit of a profit taking as well. But for now, up about 2% is what we have on that one. So we'll wait for some more details on that earnings. I was asking you about auto stocks, Siddharth. You reckon still good time to buy in some of these stocks?
Absolutely. I think that's one segment we are most bullish in. Like if you look at F25, almost like more than 16% of our weightage is in auto stocks. We have Maruti, we have Eicher, we have Ashok Leyland. So I think this is a segment which is the clear beneficiary. If you look auto numbers across segments, they've been strong, and you have some of the market leaders within that. So this is the segment we are perhaps one of the most bullish on.
Okay, don't have too many details in terms of the loan growth, etc. for Chola. They are looking to raise more money. They're looking at hiking their borrowing limit by about 20,000 crore rupees. So perhaps an indication that they're expecting more growth going forward. Let me see if I have any other details coming through right now. Not immediately. So yeah, let's just wait before the release opens. Siddharth, specifically on IT, if I could come back, because that's really the sector of the moment. What is your stance? Because stocks are not cheap anymore. Most of them are at 52-week highs. If you would still buy, what part of IT would you buy?
See, I think the narrative on the IT side has changed quite considerably in the last 2-3 quarters. So I think even the growth outlook to that extent changes. I think the other moving part is the rupee. It depends on what's your view on the rupee. If I think most analysts still have rupee at 65, 66. But if you have a view that rupee could weaken from here, then even those growth in near term starts looking good. So I think IT currently is looking attractive, and I think the fear that how some of these companies would transition, and whether profitability would be as good on the digital side, I think those things are now getting addressed. And to us, it seems like this is a sector which would continue to kind of gain momentum from here on. So I think the clear way to play it would be, to look at companies which have more success on the digital side, whether it be in the mid-cap IT companies or whether it be on the larger ones. So I think within that one need to look at. And while what you're saying is right compared to what these IT companies were trading maybe 6 months to a year back, they do look expensive. But mind you, when you compare it to say the index or any say for the large IT companies, if when you look at the index valuations, they would be still cheaper than the index valuation. Similarly, many of these mid-cap IT companies, when you compare it to the broader IT index or compare it on a relative basis, they don't appear that expensive as such.
Okay, Siddharth, we let you go on that note. Thanks a lot for joining us today. By the way, some of the other parameters of Cholamandalam Finance look really good, and I think that is the reason that you're seeing this kind of move on the stock, because
54% growth in disbursements in this quarter, Anuj.
Exactly.
And CV financing is just blazing away for the company.
Yeah, 25% jump in revenue is what you've seen, Surabhi. I think the asset quality numbers also flashed. So to grow the book at 53%, at this base and still not to have those kind of NPAs. I think for now, look at that gross NPA 2.94 versus 4.66. Of course, that's year on year, but I think that's what the market really has loved and has jumped onto that, and that's why that stock up about 4.5% right now. Ashwani, very quickly, any technical checks on Cholamandalam?
See, Cholamandalam has not corrected at all, while financials, NBFCs that are corrected. I think it should hit fresh highs, because I don't see any sort of resistance currently. Maybe next target could be closer to 1750, 1800. So one of those select financials where other financials consolidate, other NBFCs move sideways, this could keep hitting fresh highs.
I do have the QOQ comparison as well. Gross NPAs have gone down even quarter on quarter.
Yeah.
At the end of March 18, they stand at 2.94. They were at 3.7% in the previous quarter. So fantastic growth and continuing improvement in asset quality, Anuj.
Oh yes, I think perhaps this also explains why some of the other NBFCs have also been doing well. But for now, I think Surabhi, to give credit where due, it's really spectacular earnings. To beat the estimate by about 25-30 crores. Then we were waiting for other numbers and top line number, the asset quality numbers. I think right now nothing to complain about as far as these numbers are concerned. Anand, your thoughts on a stock like Cholamandalam?
Certainly an outperformer, has been doing exceedingly well, and after the change of management has actually even picked up even greater steam. As you mentioned, the numbers you can't find any fault with it. It may be a little pushing a little bit on the upper side in terms of valuations, but with this kind of performance, I don't see major issues going forward as well.
Okay, no stopping the stock, by the way, just one-way rally right now. 1670 is what we have on that one. But that's Cholamandalam Finance. We were just discussing, IT with Siddharth as well. TCS has become the first Indian company to hit $100 billion market cap. But is the run getting a bit overdone now? We have Girish Pai, Head of Research at Nirmal Bang, joining us. Girish, hi, good afternoon. So your thoughts on this big move and big re-rating that we have seen in TCS in particular? You reckon it's it's got more to go?
Yeah, so I think the run-up has been on the back of a few factors. One is the quarterly result was better than expected. Plus, for the very first time after many years, the management is talking about double-digit kind of revenue growth with almost stable kind of margins, or probably better margins than what they clocked in FY18. Then they've said for the first time that they're seeing green shoots in the US BFS space, in the large banks, that is. And obviously, the other big factor has been rupee depreciation versus 64.5, which was the average for the last quarter. We already at close to 66 points, almost like a 2 rupee kind of depreciation in the very first month of the next quarter. So I think all these have kind of contributed to the kind of spurt in prices one has seen in in IT and more so TCS. I think the other big factor which we kind of highlighted is a technical issue. It's the fact that domestic institutions and foreign institutions are significantly underweight the benchmark weight in IT, and they're kind of correcting that because the financials, which are the large overweight, that is seeing pressure both from interest rates going up. Yields have kind of backed up from 7.13, 1.14 levels just after the RBI policy. Now I think they're back up to like 7.7, 7.8. So I think, and also there's crude rising. There is issue regarding CAD, and all those issues are there. So with the worries on the financial front, I think the only large sector which is liquid, which is looking slightly undervalued and underweight, is IT, and that's why you're seeing this explosive move in the IT side. I personally think that the street is kind of factoring in fairly strong growth, not just for FY19 but also into 20 and 21, which I'm kind of doubtful about. So I think this rally is a bit overdone, but I think one needs to see this in the context of what the other sector, which is financials, is doing. So there could be further run in the very short term, but if you take a slightly medium-term view, maybe it's a bit overdone is the way I would look at it.
So Girish, now I'm asking on the behalf of people who are looking at building a portfolio, and till now we're not even considering IT too much. Should they be buying now? And if yes, then which company?
If they have not had IT at all, and if you're a benchmark player, and if you want to take a 6-month view, then I would suggest getting into large cap IT at this stage. But if you're a investor with a 3 to 5 year time horizon, I wouldn't kind of suggest getting into IT at this stage.
Okay. What about mid-cap IT? That's had even bigger move today, Girish.
Yeah, I know that. I think that's been a very explosive move in the mid-caps, and that's been going on for the last 3 to 6 months now. I'm a contrarian here. I definitely do not think this is the right time to get into mid-cap IT. Even for the shorter term, I think this space of the market has got a lot more risks to it, especially client concentration-related risk, which could lead to revenue growth volatility and margin volatility. We've seen that in some of the mid-cap companies which have run up recently. If you look back in not too distant history of some of these companies, they've disappointed in growth and earnings because of problems in the large customer base large customers that they had. Some of them ramped down, and some of them moved out of the top 10 and stuff like that. So I would be very, very wary of mid-cap IT. But the momentum is there. It could probably run up a little bit more. That's the way markets work. They swing on either sides and pretty violently.
All right, Girish, thanks a lot. Appreciate your time today. That's the word from Nirmal Bang. By the way, the market has cooled off a bit, Surabhi. So once again, this 10,600 to 650 zone is proving tough. So looked like today was the day when you were having that breakout, but once again fallen into that zone, and will be interesting. I guess
Anuj, is it the factor IT is obviously leading? Suddenly people have gotten a little cautious because obviously such a huge rally. So maybe you want to book some profit. And then when that starts happening to IT, then who's your next leader? I also just want to toss up one more question on Indiabulls housing finance. We've seen a Chola Mandalam on one side, and then we've seen an Indiabulls housing where you can argue, you can cut the numbers. I mean, it wasn't exactly all roses. And that stock continues to make new lows.
Indiabulls is also nifty stock, so to be well researched. A lot of people get in. A stock like Chola Mandalam, it's a small stock. It's a, Indiabulls is a nifty stock. Chola Mandalam is a smaller stock. Sure. So obviously, it makes a difference. And for Indiabulls, you're reacting after a day. Here, it's this intraday instant market. There's a lot of trading community that gets on. That also happens. Indiabulls is a completely different case. But the banks is once again a problem. The bank Nifty somehow, it looked like it was sort of making that bottom and moving on, but has slipped a bit. Ashwani, thoughts on this cool off? I won't say decline, but cool off that we have seen over the last 10-15 minutes.
See, just that people were expecting today to be a big breakout, etc. That's not working out. But I would think that given the way IT is cooling off, you should be building your portfolio in IT. It's coming out of a bear market. I mean, on the second day after TCS results, if things have gotten overdone, then what were we playing for 3,000 to 3,400 or 3,500? So I think people should not be short-sighted and should get into IT right now, because chances are there is much more ahead. This is the first quarter of good results. And similarly on the banks, you know, you gave it everything, bond yield, this, that, crude, but banks haven't really cooled off. They are still holding on to support, etc. And just a little bit of, you know, positive news or bond yield cool off or crude comes off $3, and you will see the banks also firing. Today, the problem with banks is just two banks, ICICI Bank and HDFC Bank. Rest of them were in the green most of the day. So I would think, you know, with a 10,540, 550 type of stock, these sort of dips should be bought. If not today, maybe tomorrow should be that day.